Hey everybody, I'm Jer. Welcome to my YouTube channel. Okay, so today we are going to talk about SOPA, Society Pass. Let's go here. It looks like they are at 1280 in pre. Yesterday they were up 240%. They are up to 1280 in pre-market, 13%. Well, 1270 in pre-market, 12%. Okay, so going through and looking at their revenue, they did in December 2020, the quarter ending December 2020, they did $2,770. They had a net income of negative $1,310,000. Net profit margin 47,000% negative. Quarter ending March 2021, 9,510 in revenue. Net income, they lost $2,760,000. Net profit margin 29,000% negative. June 2021, quarter ending June 2021, they had revenue of 7,780. Net income, they lost 4,340,000. Net profit margin negative 55,797%. Quarter ending September 2021, 83,530 in revenue. Net income, they lost 8,430,000. Net profit margin, they lost 10,000%. Okay. We go to, let's look at this. There are 31,000 shares of common stock. Okay. Total assets, they have 11 million on the book, which seems okay until you look at their deficit, which is 15,422,000. Three months ended September, no revenue. 9 months ended September, $335. Comprehensive loss, $15,493,000. Excuse me. Yeah. Okay. So whenever you do the math, for SOPA, their revenue for the last 4 quarters is $103,000. They are trading at, what was their number here? Around 222 million market cap. So they're trading at 2,149 times revenue. 2,149 times revenue. Meaning that they're currently trading as if they are going to make 2,149 years worth of revenue, which is insane. Insane. Crazy. Okay. So, why are they trading at that? Okay, so the reason behind why they're trading so high up right now is because 72% of their shares are locked up because the CEO owns 72% of the company, and his shares are locked up until April. So 180 days from whenever they went public, which I believe is April. So only like 25-ish, 28-ish percent, probably less than 28%, because his shares, and then anybody who owns more than 5% of the company shares are locked up until 6 months after they went public. So you take and let's look at let's look at Weeble. You take and let's say 19 million is what shares outstanding is showing. You take 70% of that, and you end up with a much smaller float, much smaller amount of shares available. So anytime there's kind of some kind of news, very little activity can make the stock price shoot up because there's so many limited. The shares are so limited. There's so few of them available to trade. So whenever that happens, people get excited and get in because they see the spike, and then it's a domino effect until you get like where we're at now, where they're trading at 2,149 times revenue, losing millions per quarter. So I don't, at least for me, I'm not getting in, but I can see where traders get excited about this, where people who are trading the stock get excited, and that's great and wonderful. Like if you're great at trading and you know charts, good, cool, good for you. You want to take that risk, take it. But long term, I don't see any catalyst. I looked and I don't see any catalyst that show me where this company is going to turn around and do like millions of dollars worth of revenue. They're currently at $103,000 of revenue for the last 4 quarters. Could they come up in the next quarter and be like, okay, we made 20 million? Sure. And then I would reevaluate things. But right now, with making $103,000 in revenue and losing millions of dollars, like it would, you have 20 million shares. Let's say 10 times. Yeah, let's do 10 times revenue. Ten times revenue, the $103,000, 103,300. You end up with $1 million. So $1 million divided by, let's just say 20 million shares. You end up with 5 cents a share. Is that correct? Yeah. So 20 million. Yeah, 5 cents a share. Is that correct? 20 million. Yeah. So 1 million, let's say $1 million. Let's say 2 million. Give them benefit of the doubt. 2 million divided by 20 million shares, because that's what they're trading at. 10 cents a share. 10 cents a share and that's more than 10 times revenue. It's actually closer, probably to 20 times revenue. 10 cents a share is what they are worth. You do 100 times revenue. Let's look at that. Okay. Let's say they made $100 million. Okay. 20 million shares. Let's do 100 million divided by 20 million shares. $5. If they made 100 million, let's do 10 million. 20 million shares. Do 10 million in revenue over the next, let's say that's 10 years. 10 million in revenue divided by 20 million shares. 50 cents. 50 cents. It's a risk that I'm not willing to take. If they show that they're going to turn around, sure, yes. If they have some kind of big plans, yes. But what I see actually happening is more than likely they're going to do an offering and take that money that people are basically gambling with right now, take that money, hopefully use it to invest in the company and do something great. But I don't see any of that in Catalyst and anything coming up for the company. 50 cents a share with 20 million shares and 10 million in revenue for a 10-year profit. Let's say they may be able to turn around and do this even, but that still puts them at 50 cents a share. 50 cents a share. I don't know. Like, so I say $1 price target just to be really, really, really generous, and they would have to turn their business around by a lot. Could be possible, especially if they take their chance now and do a offering and take some money off the table so that they can invest into maybe acquiring another company. Long-term investment, I'm not getting into it. Not your financial advisor. You do what you want to do. I can't press buy. I can't press sell for you. But my opinion is no. Long-term investment, absolutely not. Trading, if you know what you're doing, but even then it's very risky. Just my opinion. You do with it what you will. That's all I have. $1 price target. Absolutely. $1 price target, and that's really, really being generous. And that's if they take the chance right now and pull money off the table. Okay. By doing an offering. All right. That's all I got. I love you all so much, and I will see you very soon. Bye. Mwah.